Is this crypto cycle different, or are we seeing the same old patterns? From Bitcoin's wild price swings to the rise of AI agents, experts weigh in on what's really going on. Plus, discover why some think Bitcoin could hit $1 million by 2030. In the latest video from Crypto Rover, Bitcoin saw a dump from $112,000 due to Donald Trump's announcement of a 50% tariff on the European Union. This created a CME gap around $17,000. However, Crypto Rover believes this is a trap, pointing to a golden cross pattern on the Bitcoin chart, which historically has been followed by a dump and then a pump. BlackRock has been aggressively buying, adding $400 million to the spot Bitcoin ETF for 8 consecutive days. The cumulative flows into spot Bitcoin and Ethereum ETFs are increasing, and this month is set to be one of the best ever for spot Bitcoin ETF inflows. Crypto Rover notes Bitcoin funding rates are going negative, which he sees as a bullish sign. He believes this consolidation around $17,000 is an opportunity. He closed his Bitcoin trade at $111,000 and is looking to re-enter. He mentions his profitable Ethereum GridBot trade and a Binance sign-up bonus of $30 to $100. He thinks the Bitcoin bull market is in its final stage, where the biggest gains occur. He anticipates a supply squeeze due to decreasing Bitcoin on exchanges. On Ethereum, he's waiting for a break above resistance, and altcoins is expected to follow suit. Based on recent news, the tariff situation adds uncertainty to the market. The golden cross pattern discussed by Crypto Rover is interesting, but it's important to remember that past performance isn't indicative of future results. BlackRock's continued investment in Bitcoin ETFs is definitely a positive sign reflecting institutional interest. However, regulatory decisions around ETFs are still pending, which could influence market behavior. In the latest video from Lark Davis, he discusses whether this crypto cycle is truly different or just more of the same. He points out Bitcoin's volatility, new narratives like AI agents and internet capital markets, and the rapid rotation of hot sectors like meme coins, comparing them to past trends like NFTs and DeFi summer. He emphasizes the significance of BlackRock's entry into crypto and the success of Bitcoin ETFs, noting the all-time high reached before the halving. Lark mentions Bitcoin's potential to reach $1 million by 2030 and advises buying the dips in bull markets and selling when greed is high. He cautions against holding altcoins in bear markets, predicting many will go to zero. The AI agent sector's current market cap is about $11 billion, with top performers like Fetch AI around $1.3 billion. The internet capital market has reached a $350 million market cap, with Launchpad XYZ leading at over $200 million. NFT weekly sales have crashed from a peak of $2.2 billion to only $60 million. Lark's analysis resonates with current market trends. Recent news shows increasing institutional interest in Bitcoin, supporting his observation about BlackRock and ETFs. However, the prediction of Bitcoin reaching $1 million by 2030, while exciting, remains speculative given the market's inherent volatility. The rapid rise and fall of sectors like AI and meme coins, as he pointed out, underscore the need for cautious investment strategies. The extreme drop-off of sales volume of NFT indicates that this market is almost crashed. In the latest video from Coin Bureau, we learn about Pi Network, a controversial crypto project launched in 2019. It boasts the largest number of verified users due to its unique free mobile mining feature, but there are concerns about its transparency and operations. The video discusses Pi's origins, including its Stanford University founders and early funding rounds, raising questions about previous claims that no money was raised. The video explores Pi's technical workings, its similarity to Stellar, its centralized nature with only 3 validator nodes, and its peculiar mining system, which functions more as a user behavior experiment than a consensus mechanism. The project's KYC process, the use of user data, and the Pi Network's opaque financial dealings are also discussed. The video touches on Pi's tokenomics, including the allocation of its 100 billion maximum supply and the current circulating supply being heavily controlled by the team, impacting price stability and the potential for manipulation. Finally, the video looks at Pi's future, including its roadmap, milestones, the challenges it faces with transparency, its unusual tokenomics, and limited broader appeal among institutions, and where Pi's price can go to. My own quick search reveals ongoing debates about Pi Network's legitimacy. Some sources point to a lack of clear regulatory compliance and the project's slow progress towards decentralization as red flags. Others highlight the potential of its massive user base, if genuine, and its mobile-first approach as unique strengths. While the project has faced and continues to face criticism, it's also interesting to see how Pi Network attempts to address the challenge of onboarding users into the crypto space. Regardless, the lack of transparency around funding and Pi's centralized control raise serious questions.